Good morning. Welcome to IG's early morning call. It's Thursday, the 9th of March. Let's take a look at the headlines as we see continued weakness across the UK housing market. The Royal Institution of Chartered Surveyors has come through with its indicator, which shows that we've got numbers and negativity not seen since around the financial crisis. All this as China inflation slows more than expected. We've got producer prices deepening in terms of its deflationary figure. And Silvergate has finally called it all in. It's liquidating its banking business and going into a voluntary state of liquidation in markets. Let's take a look at volatility. It's difficult to know where this is going to move next. We've got this pullback that we've seen recently. We've seen it at levels not seen since the beginning of February. But as we see things stand at the moment, we continue to trade around the 20 level. Again, it's difficult to see just exactly what's going on in terms of some of the major moves or direction of travel. We don't really have a direction of travel. We're down today, and we're now expecting a slightly lower open to the London markets as things stand at the moment. But we remain traded within this band between the recent highs that we've seen, the record highs we've seen at 80.44 and 78.53. We're not too far away from that sort of 70% retracement from the top to the bottom of that recent band that we've got here in the London markets. A couple of companies coming up with figures this morning, which could give a steer to the markets. We'll cover those in just a few moments' time. German DAX, not too far away from the highs that we saw on Tuesday this week. We are expecting a slight drop today. It was a pretty good day yesterday on the 24-hour markets on the German DAX. French CAC 40 still not too far away from the record highs that we've got, 73.12, 74.02, the record highs that we had intraday back on Monday this week. So despite the fact that we got a fourth day in a row, looking as though we could well get a fourth day in a row of declines, certainly opening slightly weaker, it's really not too much of a move from the recent picture that we've seen. You can see, actually, broadly speaking, you'd see on the long-term chart, we're holding on to those recent gains. We've had 31.5% up from the October lows, and the market's not too far away from that peak. Let's take a look at what's going on in the Asia-Pacific markets. The Hang Seng Stock Index continues to trade, although it is very mixed there. Same sort of pattern on the Australian ASX 200. But it's once again a day of gains on the Nikkei 225. I'll show the chart. Intraday, we spiked above this line of resistance that we had established back on the 30th of September last year. Intraday at highs not seen since August last year. Then has come a little bit of a pullback. Part of that has been because of strength of the Japanese yen, and the strength of the Japanese yen has come through as a result of some of the economic data we've seen out overnight. The Japanese economy just skirting recession. We'll take a look at that as well in a moment, after we take a look at what's been going on Wall Street and the US economy. Wall Street last night ending with losses for the Dow. You remember a couple of days ago, the Dow, or yesterday, I beg your pardon, the Dow was the best performer. So there's a little bit of a loss there as of yesterday's close. But we saw gains across the S&P 500 and the NASDAQ composite enjoying a little bit of a lift. And one of the indices where we saw most upside business. But if you look at the chart, despite the fact we saw upside business yesterday in the context of the drop we saw on Tuesday, it was only a small up day on the trading day yesterday. Again, it's very difficult to work out just precisely where these markets are going to go in the next few days. Yesterday was dominated by day two of the testimony from Jerome Powell, the chairman of the Federal Reserve, to the legislature. The Fed Reserve chairman softened his tone slightly compared to day one of the testimony. He told Congress that policymakers will wait for new jobs and inflation data that's due to come through. We saw some ADP data yesterday. We've got non-farm payrolls out tomorrow. And we've got an interest rate meeting on the 22nd of March. Now, the US changes hours it goes into summertime at the weekend. So the next Fed decision will be at 6 p.m. on Wednesday, the 22nd of March. I want to show you what's happening with regard the dollar's performance. This is the US dollar basket or the dollar index. You can see, broadly speaking, holding on to the recent gains that we had as of the close of Tuesday. Powell yesterday repeating his message from Tuesday that the US central bank's likely to take rates higher than previously anticipated, and it could move faster if the economic data keeps coming in hot. But he diverged slightly from his prepared remarks on the previous day to qualify the statement by explaining that there's no date or certainty until more data is available. How do you trade this? Well, the obvious way to do it would be by the euro dollar, which I'll just show you now for the purposes of this tradable opportunity if you're short on this, and that would be strength of the US dollar, in other words, weakness for the euro, your trade goes above this area up here to right about the 107 level. 105.28 is where we're trading. 105.58, I beg your pardon, is where we're trading on the euro dollar. We've got support at 104.83. You get a break of that, you're then on the way down to this line down here to around about the 102.25 level. Now, Japan's GDP, this is where the other big news headline has been out overnight. The economy narrowly avoiding a technical recession. Fourth quarter gross domestic product stagnated quarter on quarter in 2022 compared with a flash figure of a positive 0.2% growth and after a 0.3% contraction in the previous quarter. So, as I was saying at the top, a new recent intraday high for the Japanese Nikkei 225. And I think, if anything, if you look across the foreign exchange markets, this is a chart here showing dollar against the Japanese yen. Second day in a row of losses for the US dollar against the yen. And today's pickup on the downside has, my thought process, been positive for the yen, not just against the dollar, it's positive against the Canadian, it's positive against the Aussie, it's positive against the sterling trade, euro. So I think the runaway upside winner, albeit by a very small margin, is the Japanese yen today on that economic data that we have seen. Meanwhile, Chinese annual consumer inflation slowed down in February. Consumer price index rising at the slowest rate since February last year by 1%, compared with the 2.1% annual rise seen in January, and falling the median estimate of a 1.9% gain. Producer price deflation deepening, though, for a fifth straight month. The PPI index in February falling 1.4% from this time last year, largely driven by softer commodity costs. In January PPI numbers falling 0.8% year on year. Here in the UK, the Royal Institution of Chartered Surveyors house price balance has been released, and we are seeing a particularly negative swing to the figures. The index measuring the difference between the percentage of surveyors who believe that house prices are down versus those who are positive about the outlook. It's fallen to a negative 48 in February from a negative 46 the previous month, the lowest reading since April 2009. So market firmly in decline and expected to remain subdued over the coming months. In the RICS statement, senior economist Tarrant Parsons said that given the ongoing weakness in demand, house prices remain on a downward trajectory and are expected to see further falls throughout the first half of the year at least. But the estate agency view on this is that house prices are showing signs of bottoming out. The point is here, and if we go to the chart, you can see this is the FTSE 350 Household Goods and Home Construction Index, which is where most of the house builders reside. You can see this has been a little bit weaker recently. The state agencies say this is showing a bottoming out of the numbers, and they're looking forward to a better half next year. It really does depend on which side of the fence you are as to how you read these RICS numbers. You can't get away from the fact that the worst since April 2009, but the big question is are they beginning to bottom out? My point is that there are so few houses on the market, it is supporting prices. Let's see which way this goes today and some of the individual house builders as a result of the RICS index. Now, according here in the UK, I should stay on what's happening in the economy, because one of the Bank of England voting members, Swati Dhingra, an external member of the BOE's Monetary Policy Committee, says that it would be prudent to hold off raising interest rates further. By rising rates too high, she says, the BOE risks harming the economy unnecessarily, as previous increases in borrowing costs are yet to feed through to the economy. There's the response and the quote from Ms. Dhingra. In my view, a prudent strategy would hold policy steady amidst growing signs in external pressures. Pricing pressures are easing, and the bank should be prepared to respond to developments in price evolution. Now, Swati Dhingra is one of the two BOE members to vote to leave interest rates on hold at 3.5% at the last meeting, while other 7 members of the Monetary Policy Committee voted to increase to 4%. The BOE is to meet on the 23rd of March, the day after the Fed meeting on interest rates. I want to show you what's happening with sterling, which has been particularly weak recently in the face of that stronger US dollar. And you can see the Powell testimony day one to the US legislature saw us disappear and close below this line of support at 118.42. Since then, we've seen what is now today a second day in a row of gains, but it is off a very low point for sterling against the US dollar. So far as sterling against the euro is concerned, GBP EUR, dialing that in, you can see that sterling continues to trade broadly weakly against the euro as well, not too far away from recent lows. Now, US claims preview. Quick update on what we got here. 1:30 p.m. today. Initial jobless claims. Economists forecasting 195,000 new claimants. Yesterday, the ADP survey and the US private sector created 242,000 jobs last month, higher than the 200,000 expected. Tomorrow, we got Fed non-farm payrolls. 200,000 job creations expected. Last month, the report surprised massively on the upside, announcing 517,000 new jobs. The unemployment rate is expected to remain at 3.4%. Average hourly earnings expected to rise 4.7% year on year after a 4.4% growth a month ago. Now, let's take a look at what's happening for some of the corporate news headlines. I want to begin, first of all, with Aviva. The operating profit up 35% to 2.2 billion. We have been expecting 1.75 billion. So that could well see the stock up at the start of today's trade. I want to show you the chart for Aviva, which yesterday responded to some other news coming through for the sector. We saw a very dire figure initially yesterday for Admiral, which took the stock down. You can see a very long-legged doji candle. This stock will open at 449.1 pence. Operating profit up 35%. Things looking good there. £300 million share buyback. The dividends up from 22 pence last year to 31 pence this year. So I think, broadly speaking, Aviva is delivering in terms of their overall investor return. I want to show you some breaking news headlines because we've got news coming through from Wandisco, which is not particularly encouraging news for those that are invested in the stock. We've seen, in fact, recently we've seen record highs for this stock. We will open at 13.13. There is news coming through that there's been a discovery of potentially fraudulent irregularities. Full year 2022 revenue now estimated at 9 million, not the $24 million presentation they had at the full year numbers recently. Shares are suspended at the request of Wandisco. I want to show you the entire move that we've got on Wandisco recently, and you can see actually if you look back in the stock, we had a record high here at 15.45 back in 2014, so we're not quite as high as that, but recently we have been at highs not seen in something like around about 10 years on the stock. So when the stock does return to the market, the expectations are we could well see a drop when things come through from the company requested suspension. Let's move on and take a look at another chart worth looking at. PageGroup. This is the recruitment company. Yesterday it was down 2/3%, second day in a row of losses. It posted an annual profit this morning that beat estimates, operating profit rising 16% to £196.1 million. The group forecasting persistent candidate shortages and good levels of vacancies despite challenging macroeconomic conditions. So could we see a rise at the start today? 475.4 is where we are at the moment. If you are long on this, stock goes below about the 450 level, with a view possibly to taking it up to the recent resistance of 498. Staying on the charts, the engineering company Kier Group has come through with some figures as well. I think it's worth mentioning. Excuse me. Strong performance despite ongoing inflationary pressures. Adjusted operating profit up 6% to £57 million. Margin improved by 20 basis points. This could well be a positive as well for the stock. Order book up 26% year on year. If you do get a rise at 74 pence, stock goes underneath the 70 pence level with a view possibly to taking this stock up as well. After the close tonight, we get earnings out from Gap, the US retailer. Quarterly earnings expectations are loss per share of 47 cents on revenues of 4.36 billion. It is not an all-session stock. I want to show you the stock trading though. Ahead of the open today. It will open at levels there not seen since the 10th of January, down at $11.95. Oracle also out after the close tonight. It is an all-session stock. We are expecting earnings per share in the most recent quarter of $1.21 on revenues of 13.43 billion. Stock not too far away from recent highs. It will open at 9 o'clock this morning. All sessions on the IG platform at $88.45. You can trade this after the close this evening when the stock comes through with its numbers. I want to show you Silvergate trading at 490 as at the close yesterday. Silvergate is the traditional style type bank that changed its focus into cryptos back in 2014. It got all wrapped up in the Sam Bankman-Fried debacle, and as a result of that, it's come through with some massive losses recently in terms of share price. Last week, Silvergate announced it was evaluating its ability to operate. The bank now says it's the end of the road for the company. The crypto-focused bank plans to wind down operations and voluntarily liquidate after it was hit with losses following the collapse of FTX. And another chart worth looking at, this is an all-session stock. Peloton opens at 9 o'clock this morning. Late last night, in fact, during all sessions trade, we saw it close at 13.49. The US International Trade Commission has banned imports of the video streaming fitness devices made by Peloton after a judge found the company infringed 4 streaming technology patents. Peloton has yet to say if it will make an appeal against that decision. And another chart worth looking at is one I haven't yet dialed in, but we can quickly bring up Uber. Uber Technologies, the ride-hail company, could well be worth watching at the start of today's trade. It is exploring whether to spin off its Uber Freight Logistics unit in a sale or as a separately publicly traded company. This is according to Bloomberg News. The business didn't respond to Reuters' request for comment on the story. The stock will open at 34.32. If it does go ahead with this sale, that could potentially be a positive for the stock. Now, let's move on to take a look at some of the other moves in the markets. Very briefly, I want to talk about what's going on with the oil markets. This is Brent crude. We've got this rising line of support just below where we are. We've seen 2 days of relatively hefty losses. It's consolidating at recent lows at 82.51. Yesterday, the US crude stockpiles fell last week, ending a 10-week streak of increases. The EIA crude oil inventories falling by 1.7 million barrels. Just returning to charts, take a look at 2 precious metals. Spot gold continues to hold above this line of support at 1805, 1814. But if you look at what's been happening with silver, it continues to trade lower. And indeed, yesterday we saw a new recent lower low not seen since the beginning of November last year, and we're consolidating at the recent losses. And that's it from me. We're back at 10:30 with Charting the Markets. Watch out for those stocks at the start of today's trade and the suspension of Wandisco.